What is Trump's end goal? What's going on?
From a stock market perspective, has not been positive. 2025 could be the year where we get that range break that we've been all waiting for. The early noise was that the tariffs would be a negative for Germany or Europe and China. Both markets have been unbelievably resilient.
We need to know a bit more about these meta glasses.
Yep, they're going to be the real deal at some point in the future. We'll all be wearing them here.
It definitely is a changing space at the moment with Trump. I mean, like any tweet that comes out is a potential bomb, for the markets.
It's been very clear that lowering energy costs and lowering gasoline in the States is a big part of his agenda in terms of boosting consumer sentiment and boosting their money in their wallets. That again is a big factor that just probably pushes you to think that maybe the next move is lower. You can have the best laid plans and all the stars are aligning and then something changes.
Welcome back to another episode of Two Blokes Trading. Delighted to be joined again by Aidan O'Donnell. He's back to join us again. He had so much fun the last time. He wanted to come back and fill us in with what's going on with the stock market at the moment.
Yeah, thanks, Jonathan. Yeah, sure. Look, it's all been pretty quiet in the market. Not a lot going on, so it'll be a very dull and boring podcast today.
Exactly, huh? Where else to start? I mean, US stock market is crashing. Is this the end of the bull run, or are we talking about a detox?
I'd be putting the crashing piece in inverted commas just for now. Obviously, we've had significant pullbacks in S&P 500, Nasdaq, and if you dig into some of the individual names, whether it's your Nvidias or Metas or whatever, they've all had significant drawdowns. Equally, if you go a few layers lower and a few market cap levels lower, you've also had big pullbacks in some of the biggest winners from last year. Look, is it the end of the bull run? Look, who knows, really. We've had, if you go back, every single bull run has periods where you have these retracements. For now, we've got to assume that that's what's occurring here. We're roughly 10% off highs for the S&P 500. That tends to happen, every, at least once a year you tend to get that sort of move. Once every 2 years you tend to get a bigger move. So we'll see if it develops into more. I think for now it's, innocent until proven guilty in terms of where we are. Wouldn't be getting, super bearish that the world is ending just yet.
The markets are spooked, right? I mean, first of all, tariffs have come into play, and now we're looking at potential recessionary fears after Trump's comments. So, this is where the pullbacks come from, right?
Absolutely. And look, if it's, there's a big difference between a pullback in a bull market and a pullback that occurs pre or in line with a recession. If we get into a recession, that's clearly a much bigger issue. But look, I mean, I can't recall how many times people have been, calling for recessions in February and March of every single year, it seems. And, most years we seem to dodge it. Don't know yet if this year will be different. Clearly, the big unknown is, what Trump will do, how much more volatility he will create, because it's certainly creating volatility, as we've seen all year. But whether it transpires to a recession, I think that's a long way away in terms of us knowing the answer. The market at the moment is telling you that, prices have, gone up a lot, need to come down a bit. And we'll see now over the next few weeks / months how things will settle down. If you look at some of the price action this week, where Monday you had a really big down day, and I would have said a lot of indiscriminate selling in terms of, lots of names getting hit. And that sometimes is what you want to see as we kind of try to, carve out a low or carve out some better price action. We'll see if that sticks. We've had kind of one or two reasonable days since then. Not much power in the rallies back yet, but look, I think it's a day-by-day type market now from a trading perspective.
And in terms of stocks, I mean, what stocks do you think will bounce back first if we do see it?
Look, again, it's that's difficult to predict in terms of what sort of sectors will lead us out of it. I think what you're trying to see, like ultimately from an index perspective, like it or not, you're going to need the Mag 7 and those prior leaders to contribute, because they are still, I don't have the exact number, but let's say they're 30 to 35% of the index. The index is not going to make much headway unless some of those guys are, contributing. So you do need them. Now Tesla, that's dropped 50% since the peak in December in 2.5 months. So what I would be, instead of wondering, which one's going to be the best, just start monitoring how they're trading. Are you seeing some follow through in those names? Are you seeing them bounce off lows and hold them? Even as small as, if you take this week, does Monday's low hold for some of these stocks? So they're the ones that I would be looking for clues. Over time, we know that the market wins eventually. So you're just trying to look at where's the good price action, what names are giving you some leadership, what sectors are giving you leadership. There's no guarantee it will be what worked before. We might see a transition into new areas. But I think for the market to be really healthy and for the bull run to extend, you're really going to need to see some of those growth names reset, come back, and give you better price action. So that's certainly the areas where I'm looking at for clues as to whether or not this is going to be a sustainable rally or, we continue to decline. So
sure.
So you got to watch the big guys still.
Absolutely. And benefactors from that across the markets and spectrum, we're looking at obviously gold holding at all-time highs, silver doing well, copper potential.
Yeah, like it's kind of like we spoke, I think, the last time about gold and silver, in that they're quietly doing what they're doing, and gold's at an all-time high, as you say. Silver looks very neatly poised here to kind of play some catch up with gold. Interestingly, the kind of the derivative trades within that space really haven't taken off, in that like gold miners and silver miners, they haven't run to the same excess as they did in the cycle that ran from 2002 to 2007, when gold was last really aggressively trending. So we might look to see whether you get some traction there. Could that be a space that benefits as we, enter a more volatile period with Trump? And maybe that's an area to look at, is, can these miners really get something going in terms of a trend? Because as yet they haven't really done much.
Sure.
But commodities remain a very interesting space. And gold and silver, yeah, certainly interesting areas.
We'll jump onto oil as well in a little while, but tell me, what is Trump's end goal with this? I mean, 50% tariffs on Canada steel. I mean, like, what's going on? Like, what his, obviously there has to be some kind of a strategic plan, whatever he feels that strategic plan is, or if it works or not. What is the end goal? I mean, like, at what point does it stop spiraling? And the US dollar, again, stocks and dollars declining. I mean, dollars on a 2-week downtrend. I mean, like, things aren't looking great.
Yeah, I mean, the Trump bump, which we probably talked about last time we were on, where stocks and commodities and crypto and everything else got a really big bump post the election, that's really fizzled out. What the strategy is, I haven't, I think it's we need a higher qualification to figure out what's going on inside Mr. Trump's head. But
he wants to build industry, right? Basically, like, his goal is to build.
It's protectionist. He wants to bring more industry back to the US. Make US the superpower that it was or is or should be, and that's part of the plan. But it really, from a stock market perspective, has not been positive. If you take since the election, my numbers will be slightly off, but the DAX is up 20%, and the Russell 2000, which is often kind of seen as the real American stock market in terms of smaller cap US focused names, that's down, I think, 16%. So you can see there's a really big differential, that the market has judged that these tariffs, Trump's involvement, potentially, the impact of the tariffs slowing the economy down, at least to start, is being measured in the market, and that's that's why you've seen such poor reactions, especially from the Russell. So it's, what the end goal is. What he said recently is, look, he's kind of, this is all part of the plan, and that we need to
reset. Maybe
we need a reset. We need to take things down. It's going to be a bit of pain first, but we'll benefit in the long run.
Mm-hmm.
That remains to be seen. But clearly, it is causing shifts in the market, which are creating opportunities, and then there's watch outs as well. So it's not straightforward.
Sure. And tell me, are you trading the noise? Are you sticking to charts? Obviously, you've got clients yourself. What are you telling people?
Yeah, I think
moment?
look, it's like when you've got VIX at holding near the highs of the year. I mean, it's a double-edged sword in that, look, it creates loads of opportunity because you've got really big ranges every day. So some traders will absolutely love that type of environment where Tesla's up 7% yesterday. That's a lot of percents to go for if you're looking at something like that. But I think you just have to manage your risk and manage your exposure and be careful when VIX is as elevated it is. But then trying to remain on the optimistic side that as we navigate through this, if this proves to be a 10-15% correction, and it's just a correction, there'll be opportunity on the other side. So it's it's trying to stay balanced, and that not lose your head as the markets are moving aggressively. So I think there's definitely things to do, but it's more of a case of managing the risk and being mindful of that. Yeah.
Is there opportunity in different markets? The European stock market's doing quite well. DAX is holding.
Absolutely. I mean, if you look at it, and again, last time we were on, we spoke about that the early noise was that the tariffs would be a negative for US and Europe, or sorry, for Germany or Europe and for China. Both markets have been unbelievably resilient since then, and it's the first in probably, I would say, maybe over a decade, maybe even longer, where you've seen a really big shift in a very short space of time out of US into Europe. And sometimes those big shifts turn into bigger shifts, or big moves turn into bigger moves. And I think you have to pay attention to that. Could this be an early rebalancing of, investor positioning, which for, since the global financial crisis, since 2009 and the market low, the US has outperformed Europe consistently since that period, with almost, very few periods of doubt in that trend. Whereas now you are starting to see early days of that trend reversing. Now, it's early days, it may not materialize, but again, you have to pay attention to it, that these are big macro shifts that look to be taking place. We'll see what sort of follow-through they get as the year progresses. But I would say it is it's a positive that if you're in an environment where the US is really struggling and there's no counterbalance, there's nothing picking up the slack. Whereas at least now there are other options, and money for the main part is staying within the market. It's just the chips are getting moved around to different horses.
Of course, it's safe haven flows and different opportunities. I mean, does the Chinese market offer potential opportunity?
Well, I would say if you look at some of the, we do a lot of it. If you look at some of the longer term analysis, like monthly and quarterly charts, even, I struggle to see a region with more interesting long-term charts of names that really have been forgotten about, left behind in the big bull market for that we've had for the last 15 years. They haven't really participated, but they're really starting to come to life, led by the kind of real mega caps like Alibaba. But then you're starting to see some smaller ones just creep onto radars. So again, it's another area where it's worth just casting your eye there every so often, because there's opportunity. And that's definitely something to encourage, because everyone is maybe focused on is it the buy the dip opportunity in Nvidia, or is it whichever name you want to pick there. But there's lots of strength elsewhere, and that's to me would be the focus, is look, try and find the strength. Maybe it's not the place to go back to the weakness. Try and find the real strong relative leaders.
Sure. It's strange to see no flow go into the dollar, right? In terms of generally there's some kind of a correlation there. We see, stocks kind of struggle. We see inflows into dollar. We haven't seen that. Is that on the basis of just pure skepticism on the US economy at the moment, or people just looking for new flows? I mean, why do you think that's the case?
Yeah, I mean, it's difficult to know, because it's a currency which ultimately is a ratio of, two regions over another. And at the moment, we saw the budget announcements last week from Germany. I mean, that's a really big, potentially game-changing event where, for decades of no spending and really tight fiscal control, they're starting to open the checkbook. And if that plays out, that's a really big event for the region and for potentially for the euro. And alongside that, you've seen a really big move in German bond yields, which, they've risen as US bond yields have been more or less contained near lows. So that differential has led to the movement in the currency. So it's very well, it's mapping what it should be doing based on the kind of loose interest rate differential. But, again, could it be a seismic move and a beginning of a new trend for the euro? Potentially. But stepping it back further, if you look at the euro over the last, 3 years, really hasn't gone anywhere. It's just been in this really wide range between roughly, 102 or 1.02 and 1.12. And we really haven't had a decisive break outside of that range. To me, that's the more, that will be the bigger and more important move should we get that. Because if you step back to the election, and if we'd been doing the podcast then, the question would have been, whoa, the dollar is really strong here. Is it going to break parity with the euro? And realistically, that's only 3 months ago. So I would say we've not had the decisive move on the euro. The short term is positive because we've risen so strongly, and it's a really big candle from a weekly or a monthly perspective.
Sure.
But I'd be surprised if the real move has happened yet, and that might be down the track.
Yeah, I feel personally that if this grand scheme plan that Trump has, that it's necessity that we have a weaker dollar. If we want more industry, we want more export, more tourism potentially, he needs a weaker dollar to push his plans through.
Yeah, and I think to be fair, I think that's been part of his agenda from the start, in that, look, it's to make America more competitive, and the weaker dollar will help them. But, as I said, I'm just not so sure it's the main focus just yet. I mean, we've moved around a lot within that range. So we'll see. But I do think it's going to be a very interesting space. 2025 could be the year where we get that, make or break range break that we've been all waiting for. We'll see which way it is, but I think that's certainly going to be an interesting area to track. And we haven't had a huge amount of volatility in the FX space for a while, so it's a good thing. It's opening up the ranges.
It doesn't matter how good of a trader you are, how long have you spent trading. We're all somewhat scratching our heads in certain circumstances. I mean, it's especially me as a trader, I like to build a bias off the back of my sentiment. I like to push that towards the charts and let that have enough confirmations to be confident in my trade. Certainly things have changed now, and you have to kind of reset how you have traded for the last while, and it's looking at different opportunities and so on. Now, it definitely is a changing space at the moment with Trump. I mean, any tweet that comes out is a potential bomb, for the markets, and that's a scary thing at the moment.
Yeah, I really like the line that, look, you have to trade the market that you have, not the one that you want. And sometimes, look, you can have the best laid plans and all the stars are aligning, and then something changes, or to go down the other good quotes of Mike Tyson's one, look, everyone has a plan until they get punched in the face. And sometimes it's like that, where you might have a great lineup of a particular trade, and then a tweet or a silly comment changes it. But look, it's like everything. You have to adapt. You have to adjust, and but ultimately it goes back to being able to manage your risk and
keep your stops tight.
keep, and just keep your head as you're going along, and always understanding that if it's not this time, there'll be another time. So it's just to always keep that in focus.
Absolutely. Let's move on to oil. We spoke about this in the office earlier on, just briefly. It's been under pressure for quite some time. Obviously, we're seeing some peace talks at the moment with Russia, Ukraine. If that goes through, do you see a potential downside from there?
Yeah, I mean, I suppose like all year, oil has been weak, except for we did have that spike in early January when we went from the kind of 67 area back up to 80, and that was the opportunity for me for oil to kind of keep going, but they really sold that quickly, and we've come right back now down to the lows in around 67. It does look like it wants to break it. Whether it does or not, we'll have to wait and see, but it does look to be struggling to get away from that level at 67. Below there really isn't a whole pile of support until there's a little bit at 63, but there's a bit, you're probably creeping into the 50s to get there. I suppose what you're trying to figure out is what does it mean, and or what might the catalyst be. I mean, obviously, I would say any serious ceasefire or peace deal from Ukraine would have to be bullish for that break, in terms of it would have to be a negative for oil, because look, it would just open up those energy markets again, and we're really holding higher since the invasion. So it is, there's still very much a premium in there for the tightness in those markets. Trump has been very clear that lowering energy costs and lowering gasoline in the States is a big part of his agenda in terms of boosting consumer sentiment and boosting their money in their wallets. So that again is a big factor that just probably pushes you to think that maybe the next move is lower, and ultimately that will be positive, because there'll be an element of deflation, a deflationary element to it.
Sure.
Energy is like on an individual level, I think it's like 10 or 15% of the CPI, but actually it flows through everything. So it's got a much bigger real component. So that would be a positive if we see it. But look, we haven't had that break yet either, but it does look as if the path of least resistance is lower.
Sure.
Now you need to see that kind of pick up in volatility to break the range, I guess. So we'll see, but I think it will be most likely a geopolitical catalyst that sparks that move.
Sure. Before we close off the podcast, when you came on a couple of weeks ago, we had a good chat about meta glasses, and you walked into the office this morning wearing the meta glasses. We need to know a bit more about these meta glasses.
Absolutely. Well, I should definitely be getting sponsored by Meta at this stage, because I've certainly influenced a few people to buy them. I think they're excellent. I think they're going to be the real deal at some point in the future. We'll all be wearing them here, not just me. I think they're a really good product, and I can see them being a really big game changer across a whole pile of industries, and even from a trading perspective, really useful to get your stock quotes quoted to you in your ear rather than have to take out your phone and check them. So even for the traders, there's something to do.
Plus, you look great in them as well.
Well, look, this is true. This is true.
Thank you so much for joining me again. It was real honor to have you back. So thank you very much, guys, and we'll see you again on the next podcast. Take care now. Bye bye.